Hello traders, welcome to the weekly outlook and setups volume 310. Iliya here, and as usual we're gonna jump into the markets, have a look what happened this week, and of course what we can potentially expect for the incoming one. We're about to enter December, the last trading month of the year, but we're having something pretty big ahead of us within the second week of December. So let's talk about it right now in the news outlook. Alright, so let's walk through the economic calendar for the incoming week. So we have on Monday, manufacturing PMI, pretty important, very nice news release. Futures can potentially be traded very nicely because this is 10 a.m. Eastern in my time zone. Then we're having a speech from Powell here at 3 a.m. That is during Asia, that's strange. Then we have some Euro CPI, that could be nice for the Euro. Wednesday we have the preliminary NFP. And then we have services PMI after manufacturing PMI. So Wednesday is definitely going to be a nice day. Thursday, unemployment claims, very nice. And then what is really interesting for me is that we don't have NFP. So we have the preliminary non-farm employment change, but we don't have the real one on Friday. So that is very tricky. Why is it not being released here? Are they still working on it? I don't know. But anyway, looks like a pretty nice week. I'm definitely going to be trading every single day because we have USD news every single day. But pretty much I want to take your attention onto the next week, which is Wednesday, December 10th, is when we're going to have the Fed rate. Okay, and everybody's talking about this right now. Are they going to cut? Are they going to hold? That is going to be the very big thing. Now, traders are sure 80% that there's going to be a cut. This is already being priced in. However, if there is a surprise, that is going to be absolutely big. And it doesn't matter what the result is, that is going to be a very big day because literally every single market is waiting for this right now, okay? But without further ado, of course, let's jump into the technicals. It really looks like a very nice week. I really like every single day has a USD news. It has also some Euro, for example, here, Euro. Definitely could be nice. So let's check out the charts. Fanatics, I spent 1.5 months putting together the Fanatic Bootcamp that is designed to help you exit the break-even stage with just 2 simple tools and 6 hours of content. Now, if you have been loving how I analyze the market in the weekly outlook, if you have been loving how I trade and how I think about the market, this is really going to show you everything that I do for an extremely small price. So we're going to be working on your mindset first, fixing your mindset, your limiting beliefs, and exiting your emotional cycles. Then I'm going to be giving you the 2 tools that I use, only 2 tools, so you're going to actually know what I'm doing in these weekly outlooks. And then of course, I'm going to give you the process and the mechanics for it so you can actually build it into a trading plan. So if you're interested, first link in the description, click on it, and I'm going to see you on the other side. Alright, we're gonna get started with a Dixie, but before we do that, here is my overall performance for the month of November. So overall profitable month, every single week was profitable. This final week I actually traveled a little bit, but the market was extremely strange. There were definitely a couple of setups to be capitalized on, but I just traded on a Monday before I went to travel. I took a win and then I took a break even. This is on futures, so finalized with $75 for this week. And then there were potentially some setups to be taken, but nothing was really worth it, according to me, like on gold, even on futures. So took the final week off to finish a very nice green month. So let's see how December is going to treat us. Now, as you know, I have been doing the weekly outlooks right now with something more kind of interesting, which is where I go to see what kind of scenarios I had from last week and then pretty much walk you through what happened this week, and then we go to make another forecast for the incoming week. So here again you can see I was extremely mixed up, and why was I so mixed up is because we took some massive liquidity on the DXY, and this daily bullish imbalance was tapped and we took liquidity and there was nothing for the market to continue higher from here. Okay, so I really thought that it's going to be taking this liquidity, which is yeah, eventually it went there, but you can see the opening was extremely choppy. So this is why I always tell you, like, just wait. Just wait. If you can only wait for the market, this is a very big tip, everybody. If you can only wait for the first 4 hourly imbalance that's happening after the market open, that is going to literally give you the direction of where this week potentially wants to go. It's not always the case, of course, but you can see here I wanted to see a breakout above or the market to tap to take liquidity, and then to see if it's going to print a quality bullish imbalance to start going higher or just to go lower. So actually what happens is this scenario number 3, this one, because if I delete everything right now, we can see the market chop, 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 and then the first thing that it did is there is the first bearish imbalance. That's it. Okay, and then what do we know? Look at my next liquidity target down there. Bingo, achieved. All right, So, and then also even this one here got achieved on a pretty late Friday. So if you only avoided trading that price action, and if you just waited for the market to guide you where it wants to go, it guided you to, it broke and retested the 50 EMA on the 4H, it taps into this volatile zone, gives you the short. That was a beautiful short on Wednesday, and there was also a beautiful short on Tuesday, literally the 2 trading days for that week. Then we took liquidity overnight, and then pretty much we ended up chopping up a little bit. So yeah, definitely there were some opportunities on EU and GU. Now, we're tapping into the weekly EMA as well, and seeing that we don't really have any weekly bullish imbalances, to me right now, this liquidity target starts becoming very likely to get taken because this is a weekly swing point, and this weekly swing point was a result of a weekly imbalance pullback that pushed. It took liquidity, however, it did not follow through with a new bullish imbalance, and right now that we know, the daily time frame is also failing to push price higher. Like the only level where price could have pushed higher from was this guy, this daily bullish. It tapped in, tried, but then it invalidated it. Then to me, literally, this low is also the daily week low, and it's also weekly week low. So this liquidity target for me, logically, is very likely. Now, the next question, everybody, is how are we going to get there, and are we going to get there? Is the market going to guide us there? We have this daily bearish imbalance. I don't like this imbalance. Why? Because it's too far away from price. It was a breakaway gap, and then we spent 2 days not pulling back into it. So then the next question is, do we have something on the forward time frame? And we actually do. There was a CME outage. Friday was an extremely strange day. There was some outages, some gaps, some slowdowns. My brokers were starting to go crazy and stuff. However, we made that volatile bearish imbalance, and if you also look here, like we took this liquidity, and then you can go for a more low-hanging fruit here in the form of that swing low and this swing low. And basically, when these 2 swing lows get taken, if the market continues with bearish imbalances, I would say this target here of 99 is very likely. Okay, now the market can definitely, for example, a textbook setup will be pull back into that volatile zone and then attack the liquidity. Okay, and then of course, the other bullish scenario will be if the market comes into that volatile, reacts, breaks the reaction, starts guiding us higher, then we're going to potentially take this liquidity. And if the market continues to push higher with bullish imbalances here, for example, if you're starting to really get the bullishness now, because again, we don't know, this target here looks extremely good, but we just don't know. The market might open and it just might want to decide it wants to go bullish. We should be following that. Okay. If it decides to go bullish, volatile bullish imbalances, then we look for the daily. And basically you can see I have all of my levels. So I have my bearish targets, target 1, 2, 3. I have my bullish targets, target 1, 2. All I need to wait and see right now is where price is going to guide me. And I mainly use the volatile time frame for that. There is already a very nice short setup developing here, but I usually do not trust the Friday price action, because when we have an example, an imbalance from Friday, I have seen a lot of the times Monday opens very fresh and it tends to invalidate it. So usually I'm just waiting for a new one. So if the market from here, let's say, taps and goes lower and then it prints a bearish imbalance here, I would have a lot more confidence in that fresh imbalance rather than trading from this one. Okay, but anyway, structure is bearish. The market is below the forward EMA. It's about to tap the daily EMA as well, which could be a great target. I do like DXY shorts right now, but I definitely do not exclude the longs. So let's see how the rest of the pairs are looking like. Euro USD, I see I gave a lot of scenarios right here. So again, what I'm mainly showing here is, let's see, like volatile bullish imbalance or volatile bearish imbalance. Now, we had this volatile bearish that was kind of the a more recent one. But again, this is why I'm telling you, like, don't trust the imbalances from Friday, because that is the end of the week volume going towards liquidity, and then it leaves an imbalance. But then the market, you can see, decided to, we were probably a little bit more bearish at the start on Saturday or Sunday, and right now the market ended up turning up a bullish week. And you can see right here, look, right, watch closely, there is the first imbalance of the week. It's bullish. Okay, and then what this bullish imbalance also tells us is that, hey, this bearish is also failing, and if that bearish is failing, then the market likes to attack the origin of the imbalance, which is that high. Okay, and then the market pulls back here. Now, I'm not gonna lie, it was very shitty here. Like, it dropped on Monday, chop, but then on Tuesday, right, it offered some really good setups. There was a 1-hourly setup somewhere. There was also 15-minute setups. Definitely, I don't trade EU and GU right now, but I'm definitely planning to do in 2026. And then again, right, volatile bullish imbalance. Where is the market guiding us? It's bullish. pulls back inside, another long. So there was a long on Tuesday, and then the market pulls back on Wednesday here. There was another long. And then, of course, yeah, always have your targets. I identify targets in 3-bar fractals. So I'm already telling you how I do it. That for me is liquidity, because so many are like equal flat lows, highs, inducement, and blah, blah, and flat highs and equal lows. No, right? Liquidity is literally a 3-bar swing point. That is where stop loss are. This is where liquidity is. And you're going to see, just going back this, right? And take all of these things, and you're always going to see how well the market reacts from every single, well, not every single one, but a lot of them. Okay. So we reached that liquidity, and then of course the end of the week was not so amazing. So let's see what are we going to be doing next week. Now, weekly time frame is not great. We actually have a bullish weekly candle after that very nice bearish one, but it's an inside bar, so we can expect the potential breakout next week. Where are we going to break out towards though? So if the DXY is bearish, then that means EU should be bullish. We don't have a daily bullish, so this one is right now starting to build a little bit of a triangle. This is where also we're starting to get a little bit of a conflict between market structure and, let's say, imbalances, is because if you just zoom out a little bit, you can see the market structure has been extremely bearish. Actually, really nice market structure here. This is where I really started not second guessing, but thinking that I should start trading EU, because there was some amazing setups. Lower highs, right? Lower highs, lower lows, right? But what is happening right now within the very recent price action is we made a low, and then the market made a higher low, okay? But then it's making also lower highs here. So what do you see? What do you know that is? That is a triangle formation, right? That is a kind of the market starting to squeeze and squeeze and squeeze until then it decides where it wants to break out to. Daily EMA is bearish, so that gives me a little bit more of short bias. There is nothing to stop the market for shorts. This is why I was kind of thinking we might go long a little bit more, because on this bearish move, you can see we had this bearish imbalance, but that bearish imbalance, it tapped in here, did its job, didn't take liquidity. So right now, as we're traveling higher, I do think there is a likelihood that we are going to take out this high. However, the daily time frame is not building bullish imbalances to really make me believe that. So I'm not 100% sure yet. I then go to the hourly time frame, and very similar to the DXY, we're ending up the week with a beautiful hourly imbalance. But again, I'm gonna tell you, everybody, don't trust these Friday imbalances. They do tend to fail. So let's find our targets. Target number 1, low hanging fruits, that's very recent high. And then of course, like here, you can look into some, you can look into this high as well. There are no daily highs here. Yeah. So it's literally this high, and then we're looking all the way here, but pretty much at that major liquidity point. So basically, again, don't make too many forecasts right now. I'm definitely more long biased. The most ideal textbook setup will be a pullback into that forward zone, then just expanding higher, print new forward imbalances, and guide us into the liquidity above. That would be great. Now, of course, it's not going to look exactly like that. It's going to have some slowdown periods. It's going to look a little bit choppier and stuff. You know, it's not perfect. That is my long scenario. And then the short scenario will be we invalidate that forward imbalance. We print something bearish. And then guess what? Have your bearish targets. Bearish target number 1, bearish target number 2, and then number 3 is right here. And then just, did that imbalance get tapped? Yeah. It got tapped. So yeah, basically there is nothing else to stop price. So we have just this low and this low. So if the market really starts to impulse lower, closing below these liquidity points, starting to build some quality bearish imbalances here, I would absolutely be short, because I don't care about the direction. I give zero cares, really, right? All I care about is to just wait on Monday, wait to see where the market's gonna guide me. I have my liquidity targets. I know how to trade, right? And then I just catch the move. That's it. Because once you detach from that ego to be to try to be able to forecast, okay, it's gonna go here, it's gonna go here. Like I remember back in the days, people were like, okay, watch 1.1660, and you sound like some sort of a god. You're not. All right, if you see these people, just run away. That is EU. Okay, bullish and bearish scenario. I'm definitely more bullish because of the DXY, but I'm gonna flow with it and see how it goes. GU, also very interesting development here. It was looking a little bit more bearish. It had that daily bearish imbalance, and again, I didn't know what to expect. And again, you can see the market opens and it just chops and chops. So if you have any sort of expectations, you really get chopped right here. But if you're like me, just chill, wait for the market to really show you where it wants to go. You can literally see here, right, on Tuesday, it just absolutely rocketed and it gave you the direction. Now, it was going for that high, and the market just stopped very close to that high, but it did not take it. It broke above the forward EMA. It left us the very first forward bullish imbalance here. Taps in, bingo. Right? That is the trade of the week. I always teach my students, right? Be patient, wait, find that setup that really shouts at you. Okay, because if you try to trade within all that chop, you're just gonna take losses. So there it is. It's that simple. So now we're taking liquidity. We're back taking that weekly reaction. And what we're actually having is a body break above that reaction. So this is a bullish sign. Okay, are returning bullish, but we're also tapping into the daily EMA here, acting as really strong resistance. We don't have a daily bullish imbalance. We have one all the way down there, but this one is not really relevant. This is not something that I would say right now it's gonna come here and it's gonna react. No, because by the time it gets to that daily, it's gonna have a ton of forward bearish price action. So I see a lot of bullish confidences here, especially with that break of this reaction. Now the market is having, so let's see, the bullish targets are going to be this daily reaction area. And then above that, we're going to be having the liquidity point. So those are my two bullish targets on the daily. Okay, now if you go to the 40 time frame, there are going to be some more. So now this is up for you to decide how much you want to refine. Okay, I generally, so for example, I wouldn't really refine to this forward zone when I have that daily zone. I would keep the higher time frame one. But I can potentially then take this forward zone as my next kind of lower hanging fruit before the main liquidity. So these are going to be the bullish objectives. Now, yeah, you can see it ended up very choppily. So on the way up here, it really didn't make an imbalance. It made one extremely small one here, taps in, reacts. Nothing bearish, nothing bullish. Liquidity, the closest liquidity is here. And then on the downside, it's going to be this one. And then all the way here. This is very tricky, honestly. So it doesn't give us any daily zones. It doesn't give us any forward zones. So what I do in this case, everybody, is I ask, like I do this every morning for my community, can I do something? So can I go long right now? I cannot. I don't have a daily bullish. I don't have a forward bullish. I'm not going to drop. Even if I want to drop to the 1 hour, I can't do anything. Okay, next question. Can I go short? Well, no, I don't have a short zone. Nothing on the daily, nothing on the Forex. There is no bearish imbalance. The trend is not bearish. We're actually bullish on the Forex. The 1 hourly time frame is trying to right now give me something, but it's not yet. So can I do something? No. All right. And that's it. And this is the time that a trader should just step aside and just wait. And of course, what should you wait for? Wait for the breakout. Wait to see if the market is going to give you the bearish imbalances with a very nice closure below that swing point. Okay. Because then under this swing point here, there is nothing much apart from the EMA to stop price. So let's say the market taps the EMA, reacts, pulls back into Forex, and then we can be looking for sells all the way until this here. Of course, provided it really continues to build some nice structure. And of course, the bullish scenario will be wait for the pop higher, follow the bullish imbalance, liquidity number 1, liquidity number 2, and then of course, wait to see how it's gonna flow higher. So those are kind of the two main scenarios. Now, of course, sometimes I'm a little bit more one-sided, but in this case, it's just not giving me anything to work with. The only zone I have is this daily zone, which is very far away. And then, of course, this one is a reactionary. This is not something that I would trade from because it's an old, unmitigated zone. So the market will react from there, very likely, but I'm not going to say I'm going to take a short from here because I'm going to be following the most recent order flow. So that is GU. I'm pretty neutral on that one. I'm just going to wait for the market to open, wait to see the first imbalances where they're going to guide me, and then I'm going to look to trade it. Not gonna lie, I'm just looking at this one right now and I'm like, god damn, I don't look at all at AU and NU because I don't trade them and I don't analyze them for my community as well. But look at this. So we're tapping into that forward zone. We said, okay, is it gonna tap here and start going lower? It tapped in, it tried, nothing. Then suddenly, boom, introduction of the volume. Continues going higher here, right? So there are two beautiful longs right here, probably even more if I go to find them on the lower time frames. Taps here, beautiful long, taps here, long again, and then even another long here on Friday. A really nice bullishness is being introduced into the Aussie dollar after it was looking very bearish. So this is why, again, everybody, like this is what I truly deeply believe in, right? The big skill of trading is being able to flow. It's because you cannot forecast. What you really have to understand, it's a trading truth. You cannot forecast because you don't know. You don't know where the market's going to go. So if you truly accept that very deeply, which I have accepted it literally this year, This year has been my aha moment. Literally, this is why I'm starting to become more and more profitable, is because I just don't care anymore. Before, I tried really hard to kind of forecast, it's gonna go here, it's gonna go there, drawing lines, boom, 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 boom. No, right? I don't care right now. And basically, I just flow, right? Wait on Monday, nothing. Wait on Tuesday, nothing. Oh, right now we're starting to go bullish. Okay, we went bullish. How I can trade that? Then I find my imbalance. Okay, good. We tap the imbalance. I target liquidity number 1. Then I find my second liquidity here, which was there. And then I find my third liquidity, which is here. And I'm done. So if I can capitalize on this bullish push, I'm done. And I don't know that this is going to happen on Wednesday as I analyze on Monday or even on Tuesday. I don't know. So it just needs to happen first. Or I mean, this needs to happen first. This thing shows me the direction, I identify the liquidity and the low-hanging fruits, and I just go for them. And the market literally attacked a lot of these. So anyway, what are we going to be doing right now? Well, the market is getting very close to this weekly liquidity. So is it going to go there? Again, we don't know. Now, what I really like about Aussie dollar is this beautiful daily bullish imbalance, right? You can trust daily imbalances a little bit more from last week than, of course, from the following imbalances, which is what I told you, right? But here again, yeah, this is nice price action, by the way. So it has 2 following imbalances here that can potentially push price higher. So I'm immediately going to give you the scenarios here. I am going to be a little bit more one-sided here, simply because we're really bullish on all the time frames, and we took the last liquidity here. So literally the only thing that is left is that high. So we either go textbook, perfect, towards that weekly liquidity, and of course here you can be looking to trade some sort of a following zone towards that weekly liquidity, or we fail these following, we tap into the daily, and then what is going to happen from the daily? Is it going to turn bullish, or is it going to continue bearish and then potentially attacking this low-hanging fruit? Okay, do you see? Once again, I give 2 scenarios. I'm not going to say it is going to go bullish because I don't know. It might just want to start printing bearish imbalances. It might fully disregard this daily. It might start going towards all the liquidity. So I'm going to be shorting it if that's the case. Okay, so that is Aussie dollar. Looking really nicely longs. What you have to be really careful with is how the market is going to respond from these 2 zones. Okay, we also have an order block here. It's looking really good. If it gives us long setup, we can go for it. If it starts expanding higher, we can also find another setup to trade towards that liquidity. And if it starts pulling back into the daily, you can trade into the daily. So you can take a short into the daily, and then as the daily taps, then you have to evaluate, is it going to go long from here? Does it give me the entry models for the longs, or is it going to fail that daily and then attack the liquidity? So that is Aussie dollar looking pretty good. Let's see how it goes. Yeah, NZUSD also, what a massive rally right here. Again, too many scenarios, don't know what's gonna happen. Chop, 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 and then literally there is the first imbalance here of the week. But I wouldn't really trade that because it's still part of all that chop. Then we had the breakout, then we had the trim balance, there we had a tap in, and then of course, what do you target? I mean, yeah, the weekly imbalance got tapped here. The market reacted, but then it pulls back into the fresh imbalance, and then it goes higher. So yeah, this one was looking extremely bearish, and then suddenly you can see how fast can it change the direction. There was some sort of news on Wednesday that we had, and this really caused the market to do some really big moves. Now here again, we're right now making super bullish legs. Now, is this going to sustain? That is the main question. We're still tapping into this weekly zone for the first candle, so can it still act as resistance? It could, but I don't think it's very likely. We have this little daily reaction area, so this is something, this is a place where the market can potentially react, not necessarily sell off from here, but react. And then we also have here a very small daily bullish imbalance, so the daily is really bullish on that one. So again, I probably wouldn't have a lot of bearish signs and bearish confluences, but yeah, again, similar to Aussie dollar, tap, go to the daily, and then what's gonna happen after this daily gets tapped? Is it going to pull back into a new fresh forward bullish imbalance and then go long? If there is no, so this is again where all this is where the complexity of my strategy is within all the rules and all kind of the thought process I have based on what the market does. Because here, if it pushes up with a forward bullish imbalance into that daily reaction area, I'm gonna long. But if there is no forward bullish imbalance, I'm not gonna long, and then I'm gonna wait for the thought process for the shorts. If it's gonna start giving me, for example, shorts here, then what I'm gonna be doing is I'm gonna be trading into this liquidity. And then The market taps into daily. Okay, is this daily going to hold? How do I know if it's gonna hold? I have my lower time frame models. How do I know if it's gonna fail? It's not gonna give me an entry model, and it's gonna continue with the bearishness. And then what I'm gonna do is I'm gonna take a short into the next level. Okay, but if you want to trade like that, it's pretty hard to do it on multiple pairs. This is why for now I'm doing it on just one, which has been gold. But gold has been pretty choppy in the last few weeks. Okay, so that is NZUSD. Definitely more bullish bias, looking for that daily reaction area. If this forward zone holds and pushes, we go long. If this also another scenario is that this forward zone fails, and then we straight go for the daily. Okay, so let's see. Always flow, always wait, and just like be logical. Don't forecast, don't say it's gonna go from here, this is where it's gonna reverse from. Just allow for price to actually show you that it wants to do what you think it might do. All right, so that is NZUSD. Definitely more bullish bias. AU and NU are looking really bullish, but sometimes that is a trap, right? When you go into the weekend, you're like, okay, this is looking really good, really good. A lot of times it can surprise you by just like, all right, it opens and it just starts printing bearish and like, whoa, what the hell is happening? Similar to here, right? I told you that the positioning here was very bad. We were at a massive lower low, and I told you that anytime that this one makes a lower low, it tends to make a big pullback. So there is a very big pullback. So now that we're trading from, let's say, from a higher low formation on the macro, we can also start shorting based on that, because we are very likely sitting here at a daily lower high. Right, lower high, that is another lower high at the daily EMA. So this is why, again, everybody, don't forecast, but just flow. All right, let's see gold now. I haven't enjoyed trading gold a lot this month, pretty much, like after the middle of this month here, after all that chop. Now, again, you can see I didn't have any outlooks, and then what the market did is literally just opened up, popped higher on a Monday, pulls back into the first imbalance, and then it kind of reacted from it, but then it got really choppy. And then actually we had the CME outage. There really weren't many textbook setups. So I'm going to analyze the CFD chart for now, because this one doesn't have the closure and the gap. Now, what we see happening here is that the market is actually responding from this weekly zone. And in fact, we even pulled back into this guy here. Okay. I think, yeah, on the futures, it tapped it. See, it tapped it. On the CFDs, it did not. This is why I always analyze on the futures, but I execute on the CFDs. Here again, you can see like we're going towards that liquidity. Did the futures take it? No. Okay. Now that right here is a very likely target. We're going very, very strongly there. And then of course after that is all-time highs once again. So are we going to all-time highs again? We definitely could be. We did create a little daily bullish imbalance that I was actually looking for the market to maybe give me a pullback here. Like Monday was again a very big day. Sometimes it tends to do that. Then Tuesday was a chop. Then I was looking for the daily, did not pull back, but then it popped. Then Thursday was a very big chop as well. So I didn't trade gold this week. And then on Friday, it actually offered a very nice setup, but that is when the CME had an outage, and like the futures were closed, and my brokers were starting to go a little bit crazy. The spread was big, so I just said I'm not gonna trade. So basically right now what I want to see is, in this case, I want to see a new daily to form. All right. So I'm going to wait for Monday candle to close. If we have a daily bullish imbalance here, that is going to give me more confidence for the longs. But in the meantime, yeah, there was a really nice member of my community took the long on Friday. Forward bullish imbalance again pulls back into after all of that chop. You can potentially expect a rally. This is like a very nice gold pattern. And then it ran very nicely going towards that liquidity. We don't have a forward bullish zone, which sucks. Okay. But yes, we are running very nicely, and then we also don't have even 1 hourly bullish zones. We just have this guy here. So that is definitely a setup that I would be looking for if the market was very freshly open, like Tuesday and Wednesday. I will definitely be looking to take that long into this liquidity. So basically, I am more long bias on gold. If I think we can have a potentially nice week if that daily imbalance forms after Monday closes, because that is going to give us a zone to work with. So I think that the market can potentially take this liquidity, okay, form the daily bullish imbalance, pull back into the daily bullish imbalance, let's say from Tuesday, something like that, and then from there give us a very nice higher low to potentially rally. So this is how I would see it. But again, you can see right now I'm just making some stupid forecasts that I've got no idea if that's going to happen. Now, of course, sometimes my perfect forecasts work out, but that really doesn't matter. And of course, like if the market starts creating some new hourly bullish imbalances, I would be looking to go for it. Now, what you can do in this case is you can start finding your reaction areas. Like the only reaction area left is this guy. So that is a hourly reaction area. So that will be my, let's say that this will be my weekly objective. So if the market goes higher, I will be looking to target this hourly reaction area. I don't want to throw any forecasts, but I think gold can potentially really move on the Fed rate that we're gonna have not this week but next week. So maybe this week it can accumulate a little bit, and then maybe we can move the next week. So we're having a very nice weekly expansion that can also set up a weekly bullish imbalance for next week. That will be really key to see. So let's see. I am definitely more bullish on gold. I will be trying to long it, but of course, hey, if the market, for example, on Monday decides to absolutely sell off and invalidate the new daily bullish imbalance, I will be the first one to short it. Okay, so watch out these forward imbalances. If they start going lower, then, because what I also really like is all this flat price action. So when I see usually like that, it means that this can very nicely be taken, because it's a very nice, what I call no struggle area. Like there are no imbalances, there is nothing to stop, and then the market is usually going to run very fast through these, right? So, something similar happened here. Like we're just stacking highs, stacking highs, stacking highs, stacking highs, you just boom, right? It explodes. So right now it's stacking these lows. So if you really do get some bearish confluences, like if I really see something like that, I would say that something like this is very likely as well. So I'm gonna always give you a bearish scenario like that as well. So let's see. I'm definitely more for the longs, but of course really depends on how it opens. Let's see. Let me know what you think, guys, about it in the comments. Are we gonna go to all-time highs, or are we gonna wait for the Fed, or are we gonna dump on gold? Well, USD/JPY, after an absolutely crazy rally last week, this week it was absolutely crazy chop. So really nothing. Tried to go up, tried to go down, up, down, up, down. This is how I define a consolidation. We have a bearish imbalance fails, we have a bullish imbalance fails, we have a bearish imbalance fails, we have a bullish imbalance fails. I mean, if I see 2 consecutive fail, I know that we are entering into a consolidation, and I just do not touch it. So did we make a weekly imbalance? Yes, we did. So now next week, after all of that chop, it can definitely get interesting. We're having a weekly bullish imbalance here that we can be looking for the market to tap. There is nothing on the daily bearish, so nothing to stop price and push it lower. And there is absolutely nothing on the 4-hourly. The EMA starting to get flat. Of course, we have our liquidity targets. You can mark them up yourself. You know how I draw liquidity points. I mentioned it in the previous pair that I did. Ideally, like something like that, of course, can be really nice. Or a lot of times the market doesn't want to pull back into these zones. So if it just starts rocking higher, you can also look for that long. Now, why am I long on USD/JPY? Well, because of that weekly bullish imbalance. I was more bearish on the DXY as far as I remember. So being long on UJ is not 100% sure. So just because there is a weekly imbalance, that doesn't mean it's gonna necessarily go long. You always have to be drawing your bearish liquidity points, because imagine the market just decides to continue going lower, and we might even go, for example, for lows like that. Okay, so that will be UJ. Again, if you ask me, I would say long bias. Either wait for the market to break out above, start taking all these flat highs, or tap into the weekly, then wait for an entry model from the weekly, which I would once again tell you, like from a weekly zone, you're gonna need a 4-hourly zone. So if it taps into the weekly, wait for a new 4-hourly structure to form. All right, and then as the market really starts showing you that it wants to go higher, you're gonna start targeting all these highs. Okay, but if the first thing that the market does, it pops higher, then of course you can already flow with it. So I'm a little bit more bullish on UJ, but if the DXY decides to go down, I think that can start dragging it lower. So be careful also for the shorts. All right, let's check out futures. So starting with ES, now we had a really nice bullish week, which kind of shows us that, okay, that was just a dip. So we had a 6% dip precisely. And right now the market is headed once again to all-time highs. I hope you got some stocks. I bought some of my favorite individual stocks this week, and they're looking pretty good already. So yeah, basically again, what I'm keep telling you, there was that Friday imbalance. The market never pulled back into it. The first imbalance we got was this one. The market taps in, breaks a retest of the EMA. The very likely liquidity target got taken here. The market continues with volatile bullish imbalances. There is one more right here. And then it pretty much wrapped up at this very last reaction area. So I'm actually gonna, yeah, let us make a little top down. So let's see what is happening on the weekly. Yeah, weekly time frame, really nice candle. So we didn't really drop to take some more liquidity. We just swept that weekly liquidity here. And on the daily time frame, we're making 2 daily bullish imbalances. Now, this is a very strong sign, by the way. And then the market right now is heading towards this liquidity of the daily. And then finally, we have all-time highs, and this is going to be a daily zone. Dropping onto the volatile time frame, yes, not an incredible finish. So on Friday, we had an outage from the CME. So it closed at 1 and it opened at 13. It popped bullish, but right now, yes, it's going to be very tricky to be making a forecast here because it is just at a pretty bad positioning. Like when it's at a hard high like that, it's always very tricky to forecast because it can do so many things. It can pull back into this daily zone, and then from there start buying. This will definitely be my preferred option, or it can just start building volatile bullish imbalances here and start going towards the daily liquidity that is right here. Before that, we also have, let's say, a lower hanging fruit on the voyage, but usually when they're so close together, I tend to just take one, but of course you can take both of them. And yeah, so this is basically going to be my outlook on ES. Very easy, very nice. I'm more long biased than short. We're heading towards that liquidity now. Can we stop an absolute full reverse? Yes. But after all of these massive daily bullish imbalances, it's going to be a little bit hard for price to like go and start attacking all of them. Now, if this first daily imbalance fails, okay, we can definitely have an easy target of that, a low, and then the daily imbalance. So I could potentially see something like this to happen. So I'm definitely going to include it. If the volatile time frame gets really bearish, if that daily imbalance doesn't show us any signs of holding and pushing price higher, then we can look for a short target number 1, target number 2, the next daily. So that will be ES. But I'm definitely more bullish. A lot of optimism is looking like it's jumping back into the stock market. So let's see if it's going to persist. And let's see if we're going to finish up the year with an all-time high. Here is NQ as well. Now, a little bit weaker than ES, but pretty much the same development. Again, 2 scenarios here where we're tapping into that volatile bearish. We either wait for the market to go lower, or what the market did, of course, is it printed volatile bullish imbalances, exactly how I said here, right? Wait for it to pop. With a bullish imbalance, it made it. Break and retest of the EMA gave us a really nice long into overall the weekly objective. So very nice. And yeah, right now it looks like we are reversing it. It does look like this was the dip, 10% dip on the tech stocks, because they were definitely a little bit weaker. There is a next target for NAS. There is a daily bullish imbalance that can act as a very strong support level for if the market pulls back. We are breaking above the daily EMA as well. So we acted as support here. We broke and retested it resistance. And right now we're breaking out of it again. So pulling back into these daily zones with the confluence of the 50 EMA on the daily is going to be a really nice longing area. Now, very similar to ES, we're tapping into this reaction area. And then after this reaction area, do we have one right here? It's a very small one. A very small one. I'm just going to take the liquidity point. This liquidity point as well. So yeah, basically NASDAQ and ES go hand in hand. Of course, a lot of times, for example, the tech stocks can be a lot stronger. So then, of course, you have NASDAQ going very high. Sometimes they can be weaker. So then you can see ES is going higher better, while NASDAQ is not as strong. But in general, they tend to move together. So again, like, is it going to pop higher and continue higher? Is it going to pop lower, come into the daily and then give us a long? Or is it going to fully invalidate the daily, drop into the lower daily zone, tap into the daily EMA here as well, and then go long from here? We are going to see. But in general, I'm definitely long bias on NASDAQ. Now we have a lot of daily zones to work with, which is pretty nice. And that definitely feeds on that long idea. Let's see how it's going to play out. And as usual, everybody, like, the biggest tip is wait for that first volatile zone to show you where the market wants to go, and then just flow with it. And of course, always be aware of the hard time frame zones and liquidity, because that is where the market can potentially stop. And then even if you try to trade a volatile zone from a bad position, you might still hit stop loss. So that's NASDAQ. All right, surprised to see that YM, the US30, is going very strongly. So here again, this one was looking really bearish, like daily bearish, hourly bearish was looking really good. And then we had that hourly bullish here. And I was like, okay, if that hourly bullish fails with a bearish imbalance, I'm definitely going to short it. But what happened? Nothing. So it tapped into that FOH and actually responded from it. So this scenario actually played out. It pulls back into it, pops, but then it consolidates a bit. Then it just absolutely routed. So I in general like don't like using a lot of hard time frame zones on indices, is because they are driven very nicely on very recent liquidity and momentum. So I always tend to focus more on what is happening right now on the opening, rather than, for example, all of these daily imbalances, because you can see we had all these daily bearish imbalance. Well, not really. I mean, we had this zone actually did its job. It tapped in and reacted. And then basically the market started coming into all these reaction areas here. So that is a daily reaction area. And this is a daily reaction area right now. And at the same time, it's printing 2 daily bullish imbalances. So yeah, we're having a lot of bullishness across the indices board. So I'm really curious to see how it's going to play out next week. I'm definitely going to be trading because it's very interesting. Now, again, are we just going to continue to pop higher? Are we going to pull back into the daily and give a long? Are we going to tap into the daily fail and go a little bit lower and then give a long from there? I don't know. Those are all kind of bullish scenarios. So again, everybody, like there is no way to know what is going to get tapped, where the market is going to go, and how it's going to develop. I do feel like we're having a massively bullish week. So it's like 5 bullish days. I do feel like we might have a bearish day at least, but usually when the market goes very strong to the downside or to the upside, it does tend to reverse in the same way. So we had like a really crazy drop here, took some liquidity, and right now we're going very crazy higher. So I will definitely be looking to flow with the forward imbalances, because they're always going to show you like the most recent momentum, and these are the zones that work the best for me. So over a long bias, waiting to see where like the forward zones, the fresh forward zones are going to guide us. And then yeah, always have your targets. Now on US30 is a little bit hard. We have this daily reaction area, and then above that we have all the way up this forward reaction area. So we have a lot of space there. So I would prefer in this case to work with more recent liquidity. So push, pull back, make a liquidity point, taps here, take that one, take profit. Okay, and then keep repeating as the new liquidity levels are forming. So that's US30, similar to the rest, looking pretty bullish. Let's see what this week is gonna do on the US futures. All right, let's throw a little bit of a recap now. I'm a little bit more bearish on the DXY, just based on this weekly development, and I'm really looking for that weekly liquidity here to get taken. If the daily and if the hourly time frame definitely shows some bearish signals, I would absolutely be shorting. But of course, if we get the opposing side, I would absolutely be longing. So let's see. But preferring the overall shorts, because EU is also looking like really nice longs to continue higher, and it also is kind of starting to get a little bit squeezed up, so it's not 100% sure. GU on the other hand is really choppy right now, so it doesn't have any zones on the daily, nothing on the hourly. So here I'm really looking for some sort of a breakout. Aussie dollar and NZD dollar are looking really nice. They have hourly bullish zones and they have a daily bullish zone as well. So looking to long these two instruments can be nice. Now the key question is, where are we gonna long it from? Is it gonna long it from the very recent hourly zone, or is it going to pull back into the daily zones, both on AU and NU? Let's see. Gold, I'm looking for a bullish imbalance to form on Monday, and then to potentially start trading on Tuesday, because we had a crazy expansion candle on Friday. So I want to potentially look for a little bit of a pullback, higher low formation, tap into like the 1 hour EMA, and then look to long it from there. USD JPY looking pretty choppy, but we have a weekly bullish imbalance below us. So if it taps right there and gives us a reaction, can potentially be nice. And US indices also looking really nicely long. So we're having daily bullish imbalances on all the indices. If we potentially manage to pull back to make it a little bit of a higher low, we can be looking to long from there. But of course, with indices, I always tend to just flow even with the lower time frames, because I'm basically scalping them for 2 hours every day. Okay, so that is the outlook for this week. Looking pretty good. We do have news every single day, so I'm definitely going to be actively trading. It's the first week of December as well, so the end of the month is gone. really looking forward to it, to start with the first kind of 1 or 2 weeks, good weeks of December, and then pretty much getting close to the holidays, which is when I'm gonna stop trading and start reflecting for 2026. Hope you guys are doing good. Let me know how your trading week went. Let me know how your trading month is also going. Let me know what are your biggest learnings so far, and I'm gonna talk to you on the next outlook.